Hello, everybody, and welcome to the show today. I'm really glad you could join us. So today, we're going to be talking about something that's really important, which is some cool ways for you to be able to get financing for your business, which you know is one of my favorite topics to discuss. So with us today is Mark Ritter. Now, Mark is actually the CEO of MBFS and an expert in credit unions and business lending. His primary role at MBFS is overseeing the strategy of helping credit unions assist members with business needs and consulting with the credit unions on planning the delivery of services to their membership. So in 2002, Mark started Members First Federal Credit Union business lending program as one person and a desk with no policies, products, staff, systems, or business members. That program grew to be one of the top 10 in the nation in the number of loans and balances outstanding for federal credit unions. In addition, Mark developed a participation program that grew to one of the top buyers and sellers of credit union business loans in the eastern United States. He's done extensive work with the branch retail staff, business lending, operational, and sales staff, and credit unions to educate and train them on the merits of business lending. Now, after 10 years at Member First, he took on the challenge of being the CEO of a business lending CUSO. Not sure if I pronounced that right, and I'll ask him if so. Mark was the fifth CEO in 5 years with the organization, which lost money every month of his existence. In the past 6 years at MBFS, Mark increased the number of credit unions, the CUSO services by over 500%, which is crazy. We're going to talk about how he did that, and grew the revenues by 800%. Wouldn't you like that for your business? We're going to talk about how he did that too, and ensured positive cash flow every full year he's been with them. More importantly, MBFS has helped countless credit union members gain the financing they need for business and investment needs. So Mark, welcome to the show today.
Thank you. Thank you for having me. Looking forward to it.
So is it CUSO? Is it CUSO? Help me because I mispronounced it.
The appropriate the terminology is CUSO. We usually use in my which stands for Credit Union Service Organization.
Okay, CUSO. Got it. Well, I kind of got maybe one of them slightly right, but then messed up the rest. So, well, listen, you deal a lot with business funding. So, let me ask you that when we start there, what have you found? What's kind of going on right now in the business lending space?
It's a great time. When we look at the stock market, it is a great time to seek financing. There is a lot of money. In my world, who deals with regulated credit unions, the regulatory environment has never been better and more flexible for credit unions. And ultimately, that passes through to businesses looking for financing. Competition is fierce among lending institutions these days, which means people and businesses and real estate investors have the leverage to talk and negotiate much more than you could in the past, with a great regulatory environment and a lot of people looking to put money on the street.
That's awesome. What do you find that people, because this is what I find, is that there's a ton of money out there. People don't know how to get it, or they're looking in the wrong place. So what do you find is going on? What are some of the mistakes that small business owners are making? Because the crazy statistics is that they're struggling to get money. It's keeping them up at night. They don't know how to access it. So what are the mistakes that they're making where they're not able to tap into this capital that's available?
The first thing that we always see is people searching for a mismatched lender. They're shopping a mismatched lender. When you go to McDonald's, you're not expecting a Ruth's Chris steak, and it's the same in the lending world. Everybody has their own niche. Everybody has their own world that they live in, boxes that they live. Some like to take a little more risk. Some like certain cookie cutter, some like vehicles. My credit unions, they love real estate investment loans. The environment is great for residential real estate loans, so that they're a great fit for that. Some banks, they don't like it. There's a lot, or you can go to your hard money lender. So we really see finding that right fit. And that's really leveraging your existing relationships and talking to a lender. Most credit unions that I work with, they're community financial institutions. They love to talk to people. So you can have that open conversation without going through the formal application process to just say, here's who I am, tell me what you need. The other mistake that we'll see is people are getting too emotional about their loan. We realize it's your dream and your passion and your growth. To the lender, no matter where you are on the scale, they want their money back that they're going to be lending you, whether that's Wall Street corporate financing or the highest price hard money lender. Everybody wants their money back. So understand the goals of who you're dealing with, and also understand where you are on the food pyramid, I'll call it, for your business and your business scale to help you find that lender. But really, finding that person who's a fit, who you can have a conversation with, who does other types of loans similar to you, where you can get the best interest rate at the lowest fee possible.
So let's start there, because that's where I see exactly where people mess up, as you're saying the same thing, is that they don't know where to go, right? They're going into a lender that they clearly don't qualify, and then they don't qualify. They're like, I can't get a loan, when they could have qualified over here. So let's break this down. Let's say somebody's starting a business, is a bank the best place to walk into if they're starting a business, or what kind of places should newer businesses that don't have tax returns and those type of things be looking to be able to get capital?
And that's, and of course we love to do all sorts of credits. And I'll give you, credit unions love to deal with existing relationships, and they love to help out members. Over 100 million Americans are members of a credit union today. That's 1/3 of America. So 1/3 of the people that you talk with, they probably have a membership at a credit union, or they might have one down their street that they can talk to. And I don't see protests on the street and everybody in an uproar about dealing with their local credit union. They're generally a community institution that people like. They're a cooperative financial institution, access to local decision makers. And if you're looking for that startup business, we deal with a lot of 7A loans or SBA loans, and they're a great fit. I love 7A loans when people can get them. Personally, I think sometimes they get oversold because they're the most profitable loans in a bank. So some banks tend to steer people to them that they don't need. But a credit union will help you get that off the ground, whether it's a small $10,000, $20,000 loan, whether you're moving up a little bit and need that SBA loan, whether it's a home equity loan sometimes, where that's where you have the most equity. You can go into one of my credit unions or any credit union and have that story and conversation.
Okay, so let's talk a little bit about this, because you mentioned 7A. Now, 7A is obviously, as you said, a type of SBA loan. What are the most popular types of SBA loans, so everybody watching and listening knows?
Sure. There's really two main types of SBA loans. Most of the time when people talk about an SBA loan, they talk about what's called the 7A loan. And that is, the financial institution is going to make a loan to a business, and to help mitigate that risk, because it's outside of their credit box, they will guarantee usually 75% of a loan. Sometimes it's a little bit higher, but in general, it's about 3/4 of the loan. The most common and best uses of this is if you're acquiring a business and there's a lot of goodwill and assets and customer lists that have a good value, that's a good use of an SBA loan. If you're buying a good franchise, that's a great SBA loan. That's the most common use. Or if you're a service-oriented business, and I think of the most common, dentists use a lot of SBA financing, because maybe they're buying a new practice, and really the only thing that they're going to have is a chair and the silly stuff that they put in your mouth, where there's not a lot of hard assets. The other type of SBA loan that's very commonly used is a 504 loan. That's not for real estate investments. That's for an operating business. And that is one of the most underused programs today, because that allows you to buy a building or other capital assets for your business with only 10% down, as opposed to going to the bank or credit union and who's going to have you doing 20, 25, 30% down. Those are the best deals in America. And the SBA gives you 20-year fixed rate financing on those programs.
Okay, so the main thing that people need to know about SBA is there's a program for working capital for just general purposes, buying businesses, even things like that.
Yep.
Then there's one more for the real estate, equipment, that kind of really specific needs, primarily for real estate. So one of the things that I've heard from people that work a lot with SBA loans, our finance team does a lot of these, works with a lot of these as well, is that, that it's easier now to take a building you're leasing or renting, and you can almost come in and get one of these SBA 504s that your credit unions offer. And then they're able to come in and even maybe keep their payments about the same as the rent and lease, and possibly even get in with little to no money down. Is that factual?
Yes. The SBA does not have equity requirements. The SBA is looking to use business, your business financials and your business strength. You can't get turned down for an SBA loan because of lack of collateral. They're really looking at the total picture. And many times in the credit union space, if you're buying a building, it's not that uncommon for us to use seller notes, different types of financing tools. Or if you've been in the property a while, maybe there's some increased value there where we can really move it to you're getting into this property with little cash down. Our goal is to have successful businesses and not to drive, use I would much rather have people using their cash for their business and building their business than putting it in a fixed asset where it becomes dead money.
Sure. Yeah, and what you're describing is an environment where they can go to one of your credit unions, walk in, and possibly get with little to no money down and buy what you're leasing, so turning like a liability really into an asset for the business, which then gives you more equity to be able to be acquired and with other kind of SBA loans. Speaking of the 7A, well, let's talk about both of them. What's qualification requirements like? I mean, is this where startups are going is to these kind of loans, or are they looking for 2-3 years in business and tax returns and more established? What kind of things are you really looking for to qualify somebody for SBA?
When I see franchises as brand new businesses, I see the new businesses really in franchises when you're just buying it from scratch and going to have this franchise, or you're buying a new business. Kind of in that brand new startup category, the SBA's credit box tend to be a little bit tighter, but there's also SBA microloans, and there's a great network of people who deal with SBA microloans where if you just need $20,000, $25,000 to help get that business off the ground. I really see SBA loans when you're in that motion to get your business ramped up, or if it's an existing business and you're looking at a rapid expansion, when you're looking at building those new locations. That's a really underutilized component of an SBA loan. So that's, and also the more service oriented you are, you have to realize, banks and credit unions, they still like hard money and assets to fall back on if you can't pay. But the more service oriented business you are, the better fit it is for the SBA side.
Okay. What about microloans? How do these work? Are these, because I kind of understand that these come from SBA, which normally SBA is guaranteeing the loan as you described, but are microloans coming directly from SBA, and what's like the limit or the ceiling of those type of loans?
That is really for your startup. Sometimes we get businesses in where I say, you're not quite at the maturity level for our loan, but we send you to, if you go to the SBA website, they have pretty much the whole nation covered with these community lender organizations that can give you, these organizations have money that they've raised and to lend it to community-based businesses. I've seen, and usually it's up to amounts of about $35,000. I've seen them lend to the guy who wants a gym, to the hairdresser who wants to go out on her own. Really small, dreams that there's this money at a pretty reasonable rate, and people who are looking to give to you. So, here in Pennsylvania, I worked with a lot of organizations. One of them is Community First Fund, and they love to give money to businesses for people who have that dream of it, but they just don't quite fit the bank.
Makes sense. What about qualification? I mean, what's it really take to be able to qualify for these?
On the SBA microloan side, they go very deep into the credit universe. They will look at you if you have some dings on your credit box. So yeah, that they are a much deeper, kind of maybe that C and D rougher credits. You can have a chance to build your business and dreams.
Sorry, Mark, I had to you cut out on me there. Okay, so then who can qualify for SBA? I mean, do you need good credit? Is it collateral based? Is it cash flow based? Is it all three? Is it none of them? Give me a little bit more in depth.
They do for the credit based. If you since it is a federal government program, if there are if you've been arrested or have a loss on any other government programs, unfortunately that kicks you out. If you have some arrests and convictions in the past, it's not impossible, but there's just a little more paperwork. Collateral is never a reason to deny an SBA loan, which is one of the best things that I think about them. Because a lot of times when you're starting up a business or expanding your business, you need money for things that isn't fixed assets that you can use as collateral. It's for the sign, it's for your attorneys, it's to hire somebody. So those aren't collateral, but they're great uses of the loan proceeds. So yeah, credit, there's some flexibility, and collateral is not a reason to not get a loan through the SBA.
So how's this process work, Mark? Somebody walks into your credit union, tell it to me from there. If a business owner walks into a credit union, then what's that process like when they walk into one of your institutions to go from talking to somebody initially, whether they may qualify, all the way to the funding process?
Sure. From the SBA side, the first thing, we've probably all heard horror stories of people going through the SBA loan process. And I'll say formerly and in the not too distant past, it was an absolute nightmare. To me, the SBA has become the most friendly government agency there is, as crazy as that sounds. Because they realize if it's a horrible process to go through this loan, people aren't going to have their loans. And if nobody's getting this loans, this government agency doesn't exist. So there's a little bit of they're more customer service oriented. The agency is funded just by with the fees that borrowers pay. So the first thing that we do when somebody comes to us for a business loan that might be an SBA prospect is that we'll do the initial eligibility and try to screen out all of the things that does it qualify for an SBA loan? And what are those things that the SBA commonly looks at to screen out that would stop you from getting the loan? There's nothing than working with a loan process for a month and finding out that you didn't qualify after a month. A quick no is always better. Now, under my credit union side, MBFS is owned by credit unions with the purpose of driving business loans to credit unions. So many times when we work with a borrower, we have a team of lenders, and we also have people directly in the credit union. What we do is we'll take it and we try to match it up with one of our credit union lenders who's the best fit to put you in that spot. Sometimes it's an SBA loan, sometimes it's not. Many times we're able to combo it. Maybe you need a real estate loan, but you need working capital, so we'll combo that with an SBA loan as well. So we're kind of an aggregator for the credit union industry. Most credit unions just have one or two branches. So it's really inefficient to go from small credit union to small credit union. A company like ours, we work and have clients with over 50 credit unions. And in different regions of the country, there's a kind of a network of guys like me where we're working with all the credit unions in a region who do commercial financing. So it helps to go to the QSOs like us instead of hopping from one to one to one, where we kind of have and can work with everybody together. And we're not, when you go to a broker, if there's always the brokers who will say, "Come to me, I'll help you find financing." That's not us. We're putting up direct lenders, and we're owned by the credit union industry to find loans for these credit unions.
Sure. And the difference there is that direct lenders is like your money. You're working with the actual money. So the decision, the buck stops there. And brokers are then going to lenders where then they're getting their money. So there's that in between. What about when it comes to pros and cons? I mean, what do you like about SBA loans that you think are really good for business owners? And like, this is ridiculous on why you wouldn't consider it. And then like, what are some things that kind of hold people back? Like some people think that time of getting the loan and some of these other things are barriers, but I'm not really sure if that's accurate or not. So what do you think from your perspective on pros and cons?
On the pro side, to me, the SBA is going to give you more financing at better terms for longer terms than you would ever get from a traditional lender. You can finance that working capital needs and term it out over 7 years if you need to. But you would never get a loan from even a credit union or a bank for that long of a working capital loan. You get much, much more financing, more flexible, because they want to see your business succeed. From the negative side, as I mentioned previously, I think these loans are way oversold in the financial services space because of their profitability, where sometimes you'll go into a bank and they'll say, "Great, we're going to give you an SBA loan," where you have decent finance. If you're good financials and a good business, and you don't need an SBA loan. So really give that second opinion on whether that's the right product for you. It's the right product for the bank who's trying to make a few extra bucks, because they are more expensive. And there is a longer lag time than traditional financing. If you're trying to buy a vehicle, I go to the dealership, I'm not going to wait 6-8 weeks to get an SBA loan. I want to buy that car today. So if you're planning and working ahead, it's a great fit, but they're not always, the more time sensitive you are and the more established, that's not for you. That's not why the SBA exists.
Okay, this is really interesting because, I've always kind of looked at SBA and a lot of people that come to us look at it as that kind of the epitome where you want to end up, right? Like you said, the longer term, the lower rate, lower payments. So at what threshold do you see that SBA really just doesn't work? Is it a growth? Is it the business does so much in revenue? Or what kind of criteria does somebody listening or watching go, you know what? That means this isn't for me. And then what is above it? Like what's the next level to go to when they've basically outgrown an SBA loan?
Sure. And I always say you tend to go from that startup where you're the bank, that friends and family phase, to an SBA side to more traditional lending. The stronger your business is and the more mature it is, you shouldn't be looking at the SBA side. When you kind of get into the normal, predictable income growth, cash flow growth, you should not be an SBA candidate unless you're really kind of do a large expansion. When your business is doubling and tripling every year and you're in that rapid expansion and you need money quickly, that's a little bit higher risk. And I think an SBA loan is good because they're basing your loan off of what you're going on in the future and not in the past. So that's where I really see things. I always tell people, if you can get the money without the SBA, that's the most desirable, and that's the use of the program. I've seen loan companies with $10-15 million a year get an SBA loan. I've seen really small companies, kind of self-employed people, get the SBA loan. So I look at it more on the stability of your business, how solid your financials are, more than the type of business. Now, there are some industries where the collateral's kind of funky, or almost, I hate to say it's worthless, but if you're a printing company and you buy a printing press the size of a small house that takes up a whole room, if I repossess that, I hate to say it, but there's not much I can do with it. So sometimes you might see an SBA loan just because people say, I can't do anything with this collateral. I once financed a hockey rink with an SBA loan because if I wanted to repossess this hockey rink, there's not much I could do with it.
So it sounds like you're saying, look, if you're in rapid growth mode, for example, and you're growing, doubling, tripling, then SBA might work because it's not like consistent. But if you're to a point where you've done the growth and now you kind of are growing, year after year, but it's really stable and consistent, that's maybe where you've outgrown SBA and you want to move into what you're describing as a more conventional product. So what does a more conventional product look like compared to SBA? Obviously, SBA is out, which the nice thing there is you don't have double qualification. You don't have the fees and the points and everything that's associated with SBA being in the mix. But outside of that, how are rates? How are terms compared on these more conventional type products that are not SBA versus SBA?
Sure. If you come to me today for a traditional, I'll call it owner-occupied small business loan, you're probably going to get a loan. I've seen 4.75, maybe 5.25, somewhere in that range. We don't have any prepayment penalties, which the SBA has. We're going to give you a nice fixed rate. We're going to have we're very friendly in terms of fees. We keep those as mainly a pass-through cost and maybe a small fee, and we can generally finance a lot of that into your package. So it's a much quicker process. You're negotiating with the lender directly, and we have a lot of flexibility in terms of how we do that. It's not the residential mortgage market where we're lending against a box. You can negotiate and talk with the lender about rates and terms and conditions and covenants that make sense for a mutually beneficial relationship. Now, the SBA side, they have a standard operating procedure, which is about 6 inches thick, that I have to conform to. We can both agree on it, but the SBA is the one who does it. Whereas with that credit union, you can sit down and talk with a decision maker and negotiate a deal that makes sense for both of you, and because they're looking for that relationship and not necessarily just this loan, but the follow-ups behind it, and hopefully they can help you out with your checking accounts and mortgages and car loans and those relationships in the future.
Which is ultimately what banks are looking for. They really want that relationship, the banking relationship, and they just it sounds like the banks and credit unions are trying to make sure there's as many products there as possible to keep that relationship intact, which brokers and a lot of them just aren't as concerned with the relationship, I think, which provides so much more value to what you guys do.
Yes. You're exactly right.
What about banks versus credit unions? That's the question, right? Those of us that are out here in this world, we don't know. Like, where do you see the difference between banks and credit unions when it comes to benefits or things they gain or the ability to get loans or whatever it may be?
Well, I have never. I always have that. I always say I've never been kicked out of a room because people who hate their credit union. And credit, and one of the, I always say
Which is so true. I'm sorry to interrupt, but that is such a true statement, right? Like, I'm sorry, but it was actually really funny that you said that.
So if you think about what do you picture as a credit union is a local institution that has low fees, that's accessible and friendly, and is a cooperative financial institution for their members. That's exactly what a credit union is. And it's only been 20 years since credit unions have even had this ability by the law. So that's why I always say if I went to work for a bank, I'd probably be fired in a week, because I'm pretty friendly, we're pretty relaxed, and I just want to do what's right for our business in front of us. So, last year, credit unions made over $22 billion of commercial loans across the country. $22 billion. And that was for very small truck loans. But we were also just working on a $25 million real estate project. So we, just like the banking world, credit unions cover the wide spectrum. One of my favorite things about dealing with a credit union versus a bank is access to decision makers. You could go into a credit union, talk with their lender, and if you said, can I sit and meet with the CEO and talk with them and meet with the executive, 9.5 times they're going to say, yeah, sure. It's a cooperative, friendly organization that is now driving loans to, across the country. There's over $60 billion in small business loans, commercial loans to credit unions, to businesses across the country. And that doesn't even count rental properties. I know you probably interact with a lot of residential real estate investors, and if people seeking financing for their rental properties and portfolio. Credit unions love that product, and we deal with a lot. Probably about 20-25% of our business is people seeking rental property loans in a corporate name, in LLCs, and we're giving it to them at really good rates and not the hard money rate guy, not the hard money rate.
Yeah, and so it just sounds like more friendly and a little bit easier, almost neighborhood feel to be able to come in there and get things done, whether it's a small loan to start up a business or $25 million loan for expansion.
Yeah, it's a community-based organization that, the same reason people like to go get their car loan from a credit union, the same reason people have their checking account there, is the same reason you would like to deal with them for their business. And credit unions are also much more open than sometimes the perception is. Most organizations, that maybe they're community-based where everybody in the metro area can join. Sometimes they're employer group-based, but they're even fairly wide open. In this area, I would bet there's probably 15 credit unions that I could go to and open an account today. It's not the old days of I have to be and work for this factory or company, and that's the credit union. They're very open and friendly organizations.
And it sounds like it's a little bit easier to get the loans and the financing that you're looking for, because you guys are more flexible, and it's easier to sit down on this wide spectrum of what you do. And it doesn't sound like you're fixed on people have to have all this collateral and have to have perfect, pristine credit, which I'm sure you want the good credit, obviously, because that shows they pay their bills. But it just sounds like there's a little bit more flexibility with your ability to help them get financing before SBA, during SBA, and even, when they've grown beyond SBA than what we typically see with conventional banks.
Credit unions don't lend in a box. There's a lot of good banks out there, but many, especially the bigger you go, they lend in a box. You hit their formula, they'll give you the loan. That's it. A credit union, of course, we want you have to show the ability to pay it back, but we also want to talk with you and understand the relationship into who you are and how you fit into the community and the area and what your plans are, and really kind of come up with something that's a win-win for you and for the cooperative that is the credit union.
Yeah, and what you say means so much to me, because I remember my dad was vice president of a bank, way back when. I remember as a kid crawling around on the floor like I was old, and I was warned to not hit the buzzer that alarms the police. But he would always tell me of these stories of farmers with handshake deals, and just based on the relationship where money would be lent. And that still stays with me, because I've financial services going on 20 years now, and that's cool. It's cool that still kind of exists in the world, in the credit union space.
Yeah, and as I said, credit unions have been able to lend to on this commercial space for 20 years. 30 years ago, it really wasn't needed because there was 20,000 community banks who did serve that local community and do those loans to people for the right reasons. Unfortunately, as we know, those are disappearing all the time. And we've really filled the niche of that community bank of 25 years ago.
And that's exactly what it sounds like. Mark, what else, maybe you shouldn't have asked that I didn't. I mean, what should our listeners and viewers learn about what you guys are doing that's so awesome that we haven't had a chance to dive into as we get ready to wrap up?
So, like I said, we're really somewhere of, if you want to meet with 50 lenders, there's some different groups with us. That's what we can help you do. Instead of me, and we try to be an aggregator, efficiency, we're an advisor. We ultimately want best for our people, and we can really kind of help you get those dreams and fit the right fit. And also, if it's not a fit, we're not just going to tell you no. We're going to try to talk with you about what you need to do to get that financing you need, or what changes you would need to make. So we really try to, because a lot of times we might say no for the commercial loan, but maybe we can help you in some other ways with some smaller consumer financing to get you where you want to go, or have different community organizations who can help and advise you to get you where you want to be.
Mark, where can everybody go to learn more?
www.mbfs.org. That's Mary, Boy, Frank, Sam, mbfs.org. There's a link on there if you want to learn a little bit more about what we do. If you're interested in financing, you can contact us. And if we can't help you in our region among lenders, we have a whole network of people similar to us that we could match you up with credit unions all throughout the country to help you out and get the financing you need.
Thanks for being on. I really appreciate it.
Thank you.
So everybody, go to mbfs.org, mbfs.org. I'm going to make sure that this is available on the show resources page. I love what he's talking about because, like I said, I grew up hearing these stories of what it used to be like of being part of a community almost in the lending environment, and where handshake deals were done and where trust and relationships were built. And then that trust and relationship that's established, well, as long as obviously the performance of the business are taken into consideration with lending money. And those of you that watch a show know I talk about this a lot. And so I think this is a great thing that you need to consider. As Mark has said, they've got options where they can help you as you're just getting started. When you are in that SBA to get the longer term and the lower rate, even beyond that, so you're able to get in with his organization and start relationships early and then continue to grow those relationships all the way through the expansions of your business. That's really hard to find with any institution. So make sure you go to mbfs.org to learn a little bit more about being able to get approved for the most money for your business at the best terms. So that's mbfs.org. Make sure you check it out. We'll put it on the show resources page. Thanks everybody for tuning in. Have a great day.